Welcome to the latest edition of LUMA's Market Report. I'm Connor McKenna, Director at LUMA, and today we're going to cover some details on how the operations of the ad tech and MarTech sectors did throughout 2022. We've spent a ton of time in these videos talking about the changes in share prices and valuations throughout the year, but we haven't had a chance to look back and see how did the companies actually perform, and in particular, how did they perform against the expectations we had going into 2022 before we had all this disruption. Before we dive in, remember to go to our website, lumapartners.com, to download the full report where we have all of the data on the M&A activity, public markets, and private financings across ad tech, MarTech, and digital content. Let's get into it. So on this side of 2022, we all know that it was a wild year with lots of macro exogenous impacts hitting the broader economy and in particular the tech ecosystem. We've talked about the share prices being cut in half or worse, valuations stabilizing towards historical norms, but what we haven't spent a lot of time is dissecting what actually happened to the business operations of these companies. How did their growth do? How did their margin do? And so we wanted to take some time today to dig into that. In particular, look at how did these compare to what was expected at the start of the year to how it actually ended and how that will impact going into 2023. So let's start with ad tech. 2021 was an incredibly strong year for ad tech. You had about a dozen companies go public throughout the year. Most of the sector was hitting incredibly high growth rates as well as very strong profitability, something we hadn't seen in the sector for some time. And so people were riding quite high going into the 22 year. So much so that analysts expected across the sector that ad tech companies were going to do about 26% growth and 27% EBITDA profitability throughout that year. So really, truly strong rule of 50 companies across the sector. What ended up happening, as we know, was that there were much bigger concerns around ad spending as interest rates went up and some global crises came at. And so what happened throughout the year was instead of that 26, 27, what we saw was growth dropped and margins held. So growth dropped by almost 2/3 to about 12% on the year across the sector, but margins held pretty strong at about 24%, something that's been a little rarer for this ecosystem that historically has not been good at predicting when spend may go away and therefore struggling to modulate their expenses in response to dropping growth rates. Now, going into 2023, we're expecting to see more of the same in the ad tech sector. So about 10% growth across the sector and about 23, 24% EBITDA margins across the sector. So, still doing quite strong in the profitability. Growth is expected to be a little bit slow, particularly in the first half of the year, but for potential upside as the economy, potentially finds some strength later on. Moving on to MarTech is actually quite a different story than what we saw in ad tech, and this is really driven by the differences of these two cohorts' business models. Unlike ad tech, that's more transactional, driven by advertising that come in and out, the MarTech sector is more pure SaaS, driven by annual long-term contracts and really focused on retention and net renewal rates versus driving further ad spend. So coming into the year, the focus had been all about growth. Just like ad tech in 21, MarTech saw a ton of growth, and really the emphasis was there versus profitability. So the expectations were about 25% growth across the sector and only 5% EBITDA margins. Now, what we saw was actually very different than ad tech in that growth actually maintained in the MarTech sector. So coming in at about 23%. And because these companies started focusing more on profitability, especially for the future, EBITDA margins actually increased. So there came in at about 7.5% versus the expected 5%. And going into 23, this is where things really start to get interesting. This is the year where we're seeing growth really take a hit in the MarTech sector. So that 23% from 22 is expected to drop almost in half to about 13% this year. And EBITDA margins are expected to continue to grow up to about 10%. The reason for this is that these are a sector that's really driven by these longer term SaaS contracts, and so the time period or lag of the retention rates and when the renewals come up allowed these companies to continue to grow throughout 2022, but are really starting to come into effect in 2023. The big question now is going to be what this higher interest rate environment continues to do to these sectors. Over the last year plus, we've seen rates go from nearly 0% to about 5%. But just a few weeks ago, the Fed has now said that we are nearing the end of these rate increases. So it's going to be a big question mark as to how these companies continue to react. For now, what we see in the sectors is continued focus on profitability being a core driver across both the ad tech and MarTech sectors. The other thing that we are starting to see and had been predicted before is more focus on consolidation and companies being taken private. This is really highlighted just in the last few weeks with two companies in 1 week being taken private. That's Momentive and Qualtrics in the MarTech sector announced deals to be taken private by private equity companies, highlighting the fact that these stabilizing valuations over the last year, companies starting to have 52-week highs that are in line with their current stock prices, is opening up buying opportunities for those in the sector. That's it for me. As a reminder, our Q1 market report is out now. Please go to our website, lumapartners.com, to download all the data on the M&A activity, public markets, and private financings throughout this quarter. I'm Connor McKenna, signing off.